Welcome to the Dividend Talk podcast, episode 239. How we deal with our emotions as dividend growth investors. Yo, 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 European DJI. How are you, buddy?
Really good. Spring is starting, so weather's getting nicer. It was still freezing this week, but today was a lovely day, and I start to see people all starting to work in the garden already, and I love working in the garden as well. I don't know about you. I don't think you have a garden really, right?
We have a small garden, but it rains most of the time here, so it's not fun working in the rain.
No, I'll be cleaning up the land. Let's call it like that a little bit this weekend, I think. So count on me that on Sunday I will be on with back pain on the couch watching some football.
Nice, nice. No, I don't envy that. But hey, what happened in the news this week? What's going on in the world?
I mean, the world keeps on turning, right? So we don't need to talk about our American friends and what's all happening there with tariffs. That's already a bit boring, I would say.
Mhm.
But one thing that caught my attention, and it was shared by Rafa, one of our long-time listeners and followers, who we also met in the Netherlands this year. Yeah, he shared the information that DoorDash, so this food delivery service, and Klarna have signed a deal where customers can choose to pay for food deliveries in interest-free installments. Can you imagine this?
I mean, what?
Yeah, so imagine you go to the McDonald's and you can say like, "Can I pay now and buy no buy now and pay later?"
I mean that is crazy. That is crazy. I mean, you're talking about, I don't know, if you go to McDonald's, maybe pay 30, 40 euro. So how long you want to pay that over a month?
I mean, can you imagine they would like create these subprime mortgages packages out of this, that they slice it up and then rate it as triple A triple A loans.
Um, I mean, it will sound harsh, but if you can't afford fast food, you probably should not be eating it. I mean, I don't know. I don't know. But there must be a market there. They wouldn't do it if there wasn't the market for it. But
I
I,
mean, I don't own them, but I mean,
beggars belief, beggars belief.
I
Anyway,
yeah, I
uh,
cannot imagine that people go to Greg's, right? One of our favorite holdings, for a sausage roll. And they buy it on credit and they ask if they can pay it later in installments, interest-free installments, right?
yeah, to buy a sausage roll for
Yeah.
365 and pay a penny a day for a year.
Imagine being the debt collector of this.
Uh, I don't know.
You need
So
to go to someone's house and what? You need to take possession of the equivalent of a sausage roll from Greg's somewhere.
so sometimes I feel like the world is just going crazy. I mean, not non investment related, but you know Conor McGregor, right?
Yeah.
The MMA fighter. Yeah, he's just announced he's running for presidency in Ireland. I mean, it's crazy in itself. He's just off the back of a lawsuit, which didn't go his way, and there's not been too much good publicity about him. And now he announces this, and I feel like the world is going crazy. I mean, I'm reading this, I think that's crazy, and then I see stuff like DoorDash are doing interest-free installments. I don't know what to believe anymore. What's going on? Is there any good news? What about Nvidia? I know you had a look at Nvidia this week.
Oh, yeah. Oh, thanks. Yeah, good that you bring it up. I was listening to Jensen Huang's keynote.
Yes.
Oh my God. Have you seen that one at the GTC conference?
No. No.
Oh man, I recommend to watch this. I mean, I don't understand all the technological terms that he's using there. It's a bit for nerds, but I have a feeling that history is playing out in front of my eyes there. Yeah, this is kind of like he's like the Steve Jobs from 10, 15 years ago about the iPhone. Well, what he really created with that was just all our kids being addicted to it. So you can wonder about the contribution to society. but they are on fire, they were sharing their roadmap, they're talking Blackwell, how it's going, how they're scaling up and how they're scaling out. Then Ruben that's coming up, that again creates so much more efficiency and computing power. How they have really reinvented the design of the racks. Also, they have now new power cord cables based on fiber, I believe, instead of copper, which also creates a lot of opportunity again to scale up. I mean, the innovation there, unbelievable. I was really speechless when I'm listening to him. I have a feeling like this guy is like single-handedly pushing a revolution with his company, because AI would be nowhere without Nvidia. And if I see how he's ahead of the game, he's thinking forward, yeah, and how customer focused they are, it's unbelievable. It's really unbelievable, Derek.
Yeah, I think so. You think it's more
Yeah,
like Apple-esque kind of?
yeah. But then I mean, in total different space, right? But in technology, and this is tough technology. This is not easy. Yeah, and with the all hype that's going on and the demand that's there to be able to scale up, to be able to innovate ahead of it, while at the same time make sure you have your manufacturing capacity and everything. I mean, it's mind blowing. I mean, I have over the last 10 years seen a lot of investor presentations, a lot of keynotes, but what I'm seeing there is for me like once in a decade, maybe even once in a lifetime, Derek.
Yeah.
It's the innovation that's going on there and the clarity of thought he has in what is needed. I mean, he really, when you read about the Amazon flywheel, yeah, you know this story, right? How Amazon started and the focus on on
Yeah.
on on lowering costs and such and bringing in more customers. He has reinvented this flywheel and put it in a much tougher business area around in the chip industry, let's say, in an AI boom that the whole world is chasing after. It's amazing. I mean, I was really like, I think I was listening for half an hour, 45 minutes to this, and you get this moment that you feel like, I think I'm watching history here.
Yeah. And
Yeah.
does that make you then change your opinion, or not even change your opinion, but would you be tempted to invest in them?
No, because they don't pay a proper dividend.
Yeah.
It is as simple as that, but it doesn't mean I can't have respect for what's going on there. Yeah, because I work in the IT, right? So, and this is difficult to understand for people that are not in the infrastructure and in the deep in the AI space. It's really difficult to understand. But I do believe that I can spot magic, not magic. That's maybe not the right way. I do think I can spot what real true innovation is, and when people are on fire, when people are like churning out innovation. Like, I mean, we would, you know, normally in IT you could spend 5 years on an SAP upgrade. Yeah,
Yeah. Yeah.
look at what they are doing.
Yeah. I'm looking at some of the slides that from that, and I can see like data center capex spending is going to quadruple within the next 3 years alone. That's, I mean, phenomenal. If they're right, there's such an opportunity there. And
Yeah, I recommend everyone to watch his presentation in GTC. It is hard sometimes to understand the language they use. You need to be in it, but it's mind blowing. It's the innovation that's there that's mind blowing. Yeah, the capacity increase, the performance increase in such people find it hard already to understand ASML. Yeah, it's already so high tech. Now they are using, let's say, ASML with TMC to design stuff on that, which is so high end, so niche. I mean,
yeah.
and everyone needs it, everyone wants it. I mean, if you see this and you listen to Pat Gelsinger, where they were trying to overclock a CPU to have a new world record. I mean, while they were doing that, like a bunch of nerds that were still working in the garage, he was inventing all of this stuff.
Yeah, it's crazy. It's crazy. And look, AI is no fad. It's not something that's going to come and go. I know our company is using it a lot and starting to introduce it slowly to the workplace, but I know behind the scenes there's a lot of work going on with AI. So if we're using it, you can be sure that there's hundreds of other
It's there to
companies.
stay. It's there to
Yeah,
stay. It may be a bit overhyped, of course, now, but I really like this term of overhyped on the short term and underhyped on the long term.
yeah. But I think overhyped is the likes of ChatGPT and that area of AI,
Yeah,
but actual real case uses within business analytics
yeah,
and I think that has definitely got
yeah.
some ways to go. But I haven't looked at it. I might watch it and see
You
if
should, because you're an engineer. You will, I think, appreciate the innovation behind it.
yeah, yeah. And it might be good to see how I manage my emotions with something like that. But we might talk about that a little bit later on. Dividend announcements. There's been one or
Well,
two.
first, I wanted to still look at
Go
one other news item in the
go for
week,
it.
and those are the earnings from Nike.
Ah,
Because
okay.
we got some questions about it also from your Rurings, whether we could talk about it and give an our opinion. So maybe for our listeners, the share price dropped today, I think 7 or 8% here. So it's now trading around $65, which is quite a huge drop if you look at where it was trading like a year ago or 1.5 year, 2 years ago. Yeah, I did a deep dive on it not too long ago. I think 5 weeks ago, something like that. So if you're a premium subscriber and listening to this podcast, then please just have a look at it again with a fresh pair of eyes if you're curious, because kind of my investment thesis still stands. Yeah, the one earnings report doesn't really make a difference. Otherwise, I would have also not really done my analysis well, I would argue. But it doesn't look so good at this moment. Yeah, so you can clearly see that the company is trying to change things. They are trying to break out from the model that the predecessor of the current CEO, Mike Donohan, or what was his name, started. So he went. He's trying to break out of that, but it comes at the earnings, decline. So
Yeah,
revenues down 9% year over year, gross profit down 16% year over year. Luckily, they are also good in cost control because they have been reducing the overhead expense also by 13%. And 13% is not a little, it's more than 400 million. So probably a lot of job losses there as well. In
yeah,
the end, the basic earnings per share dropped by 30%. I haven't been able yet to see the cash flow statement. It was not released because I need to see that. And why I need to see that? Because the effective tax rate was 6% versus 16% last year, this quarter. Why does this matter? It may mean that the real underlying earnings are even worse per share. Yeah.
yeah,
So I really need to look at that to understand what the free cash flow is. In the meantime, they've been nicely buying back shares over the years, so 3%. So they are nicely using this opportunity also to buy back shares, which I think is this is what you want to see, right?
yeah,
During these times. Um, yeah, so these are the hard cash numbers. Yeah, and this is what it means if a CEO is changing his strategy in a cyclical, consumer sensitive industry. And yeah, you need to be ready for this. So then the question about opinion of turnaround, I mean, he's just doing what he said he would be doing, and I agree with those actions. The thing that the former CEO did was um, with all the retail partners that they have, they didn't got all the, I said, I have to say it in a simple terms, and it's maybe not 100% correct, but think about not giving them all anymore the top high-end products at the first one on the shelf. Maybe not giving them all the special treatment anymore because they started competing directly with direct to consumer. Yeah, cutting them out. But what they've been really doing is also reducing the amount of eyeballs on their products. Yeah,
yeah,
there is such a thing that, like I see it as well. Sometimes we want to just go as a family to the shopping mall, and the kids just want to try something on. And if Nike is not first and at the most prominent part of the display, they'll choose another brand.
Yeah.
And if they only see second-grade Nikes, they'll try the ones that have the more wow factor, right? And that are doing the marketing well. I think that's what they did wrong. CEO is trying to return that. I haven't seen also what the Jordan brand is doing. I wonder if Jordan was such
Huge one.
a strong tailwind over the last 3-4 years, but I don't see it so strong anymore in my environment here. So maybe also some trends are fading out.
Yeah, it's hard to know. But do you consider them a turnaround company or just in transition?
I see it more in transition. I mean, I see turnaround. I shared the definition the other day with others. I see turnaround more if your whole business is under threat of existence. Yeah, like seriously, like okay, 50-60% profit loss. That's what I see like what Intel had and such. I see these more as part of the cyclical nature of a company, and sometimes companies just overshoot a little bit with maximizing profits on the short term at the cost of the long term. Yeah. And then the question is it life threatening for the company? At Intel it was. At Nike, I don't see that. So, in my opinion, it's more like a transition, because they could have stayed on the former path and they could have probably milked it out for a little bit longer. But then we may have started to need to talk maybe about the turnaround. So, I think this company has really good management. They saw this on time, fired the CEO, brought an old-timer back in. I've watched several videos of this guy to understand what kind of person is this. If the opportunity arises, would I want him to manage my investment or not? And I have a good feeling with him.
We all know the phrase "buy when there's blood on the streets," and I feel like that's way overused in out of context. But for a company that you feel is in transition and quite cyclical, I think it applies quite nicely to someone like Nike. So
yeah, and then don't get me wrong, Nike is not cheap yet. If you now see the first 9 months earnings are $2 versus $2.76 the year before, which is almost a 30% decline. Let it be ending at 250. At 65, it's still then 28 PE.
Yeah, which is
not cheap. It's not cheap.
Nice one. Let's look at some dividend announcements then. And the first one's quite interesting. You know them a little bit better than I do, but it's Fuchs. I tried to not pronounce that with my Irish accent, but it's a German company, and it hiked its dividend by 5% to €1.17 per share. And I think that's in line with your expectations, if I remember your article on them. Colgate-Palmolive, ticker symbol CL, hikes the dividend by 4%. JP Morgan Chase hiked its dividend by 12%. Qualcomm hiked its dividend by 4.7%. And we've got Williams Sonoma hikes its dividend by 15.8%. That's a company that comes up actually a lot that I've never really looked into. Dividend King, I believe, or is definitely Aristocrat, but
Williams Sonoma, I think, has 19 years of consecutive dividend hikes.
19 is it?
I thought so, yeah. Not 100% sure, but I thought so.
Yeah. Still 15.8 is quite good.
Yeah.
Okay, let's move on to the main topic. And we thought we'd have a nice discussion around our emotions as dividend growth investors. Sometimes I feel like we speak very logically on this podcast, and that's not always the case. We are human. We do have emotions, and sometimes it's hard to handle them. So I'll start the discussion off in it. How do you deal with your emotions as an investor? What do you think about it? Do you actively try and read books to help yourself, or
how I deal with my emotions? That's such a difficult question, right?
Yeah,
because it means that you know and realize when you're emotional, and that's really hard. So I think this comes just to some extent with life experience. Do you have this thing like that? I sometimes know now when I'm angry that I shouldn't send an email. Do you have that
Yes,
as well?
yes, yes.
Yeah.
Um,
Now,
I
how did you come to that situation that you shouldn't send the email?
do you know when you read back on emails or you get a response after you've
Yeah,
calmed down and you
yeah,
read what you send?
yeah.
Yeah, you kind of know. But we kind of have a running joke in work, and if some of my coworkers are listening, I try not to send an email or a response to an email before 10 o'clock, before I've eaten. Because usually I get up, I have a shower, go to work, I don't eat until 10 o'clock. And if I'm hungry, I make irrational decisions. so so before 10 o'clock, if I get an email, I read it, and if I can feel myself going, typing like real fast, I just stop and I just go off and do something else. And I'll write back at 10:30 after my breakfast.
And do you ever buy something before 10?
No, 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 no. We go at
No.
10 o'clock religiously. So
No, I mean buy dividend stocks before 10 o'clock.
no, no, never,
Oh.
never,
That's
never,
also good.
never.
So
I buy gambling stocks or something all day.
yeah.
That's what.
No, but this kind of is my answer of how I deal with emotions. Most of my emotions, you just as I get older, the more I invest, the more mistakes I make, the more I evaluate, I start to recognize some things. So how I deal with my emotions first of all is just to accept them and try to spot them, which is really hard. Yeah, really hard, but I try to spot them. And once I spot them, I know what to do.
Yeah,
Yeah, then the rational mind kicks in.
yeah.
So
I feel
yeah,
some emotions are probably easier to spot than others. I mean, being
hmm,
angry is one thing. I mean, everybody
yeah,
can feel that emotion, but
yeah,
something like feeling FOMO, you might not even think like you have
yeah,
FOMO, but you might jump on an investment that you might not necessarily do if you are thinking rationally. Maybe you see something like, uh, let's say Evolution AB, right? It's in
yeah,
an industry that you don't particularly partake in. You see these huge cash flows. There's loads of people jumping on. The share price is going up, and I'm not saying you did in that moment, but I'm just giving an example. But I feel like that's the hardest one to
yeah,
notice that you've done until afterwards. I think.
yeah. So and then this is where I really have some rules in place. Yeah. So one of my rules is don't buy a stock if you didn't analyze it. Don't buy a stock if you didn't at least read one annual report.
Yeah. And have you ever broken that rule or those rules?
Yeah, definitely. Yeah, just not in the last few years. But yes, I've broken those rules. But yeah, now I don't do that anymore because I know I get in trouble with. No, not actually. I don't even know if I really got in trouble with that. It's more like I want to avoid getting in trouble with that because what I have learned is that I really need to know what I own because
Yeah.
otherwise I don't have conviction. And when I don't
Yes.
have conviction, I can do weird stuff.
Yeah. Yeah. But probably something similar. I don't think I've ever got burnt by doing something like that. But definitely it's conviction. It's when things go wrong is
Yeah.
certainly when it would have hit me the most.
That,
But
that's, for instance, now the case with Nike, right?
yeah,
With Nike, if you would just do it because whole internet is buying it because they say like, oh, it's a $65 now. Look how cheap it is. It wasn't 90 before. Typically the price anchoring, big brands and such, and you would just buy what many people do. So I don't do that. Yeah, I don't do that. I made those rookie mistakes in my first few years.
yeah,
I had dividend cuts after that and such. And I just the last, I don't know, 6, 7 years, I've never done that. Yeah, it's like just read first annual report. You don't need to be a stock market hero. You can wait a few days. You don't need to do bottom fishing. And if it so happens to jump up 30% again, well, so be it. Yeah,
yeah,
there are more stocks in the stock market.
yeah. But then what about someone like Nvidia? Because that's kind of fascinating. And I was going to ask you this earlier, but I knew we were coming to this segment. Like you've watched that presentation, you've watched that whole
Yeah,
that whole thing, right? And you turn around and you say live on this, saying that looks like a once in a lifetime opportunity. It feels like history is repeating itself with a company like
yeah,
Apple, and you've seen what they've done. Bear in mind, they weren't exactly a top class dividend company at the time when you
yeah,
bought them. Like how do you control your emotions watching that, knowing that you're in the IT sector, knowing that you have knowledge around this and you
Yeah.
can sense that this is going to be once in a lifetime? How do you control that emotion not to go and buy that company? Because I don't know if I could.
So I can I really distinct the business from the stock. Yeah.
Okay.
So I have much appreciation for the business. The stock for me, the valuation multiples, they don't make sense to me.
Yeah.
So they may be right, they may be wrong. One thing I learned over time, I can't I struggle with such fast growing companies, because what you end up doing is extrapolating this into the future. Yeah. And I don't know if this will be like, if this will be for 10 years. So I would need to do a reverse cash flow and such with Nvidia. And if you then look at the company, and if you then see what kind of cash flow needs to come in,
Yeah.
it just goes above my imagination. And I don't need to own Nvidia. Yeah, it's so much easier because it doesn't pay a proper dividend. So they are already like filtered out. So I think by sticking really close to my plan, being laser focused, whatever you want to call it, yeah, but sticking really close to my plan, I have it really easy with the fear of missing out. I just have, you know, really simple said, Derek. You can see the most beautiful woman walking over the street. Yeah, really like, I don't know, Brigitte Bardot in her best times. Yeah. And then you see like 30 photographers walking after it, all making pictures and everything. And then you watch to the left and you see your wife. Yeah. Would you drop your wife and then jump with the other photographers and also say bye? No. Yeah.
Yeah.
I would just say, I love you, honey. And look at that. We just saw Brigitte Bardot.
Yeah.
Isn't that cool?
That's a very good analogy, I have to say. That's really nice. So I get your point. I get your point. I guess knowing that they don't fit in with my goal, I find it a little bit easier that they don't fit in with my
Yeah.
overall goal. But then when I look at the makeup of your portfolio, you have this 10%, I don't know if it's still 10%, but this small part of your portfolio for growth companies. And it feels like that would sit there.
No,
If
it wouldn't, because the valuation,
it's too high.
yeah, for something, if you think about a company that could be on my radar from a valuation point of view, is Google.
Mm-hmm. Yes. Yeah.
Yeah, because I do look a little bit at the multiples first, and I just can't properly invest in companies with a 50 or 60 multiple. There's too much growth in there, and I find those high growth numbers much harder to predict, Derek. I can understand the Google making 10-15% compounding, or Microsoft 20% compounding, but the numbers that Nvidia is doing. One thing I learned about studying all those companies is that slow compounders are the best companies from a mode point of view, typically. What I mean with that is, like, if you can earn really fast a lot of money, you can also lose really fast a lot of money, because it usually means that there's a technology aspect to it. Now, this may be very, very hard to imagine with where Nvidia is today, yeah, and how it is executing. I think even if you could copy the technology today of Blackwell from Nvidia, you will not copy the culture that they have and the
Yeah.
innovation power. Yeah. So that is also part of the mode. But just generally what I've seen, think about Zoom. It comes, but very easy to replicate. Only thing what Microsoft does is copies it, makes Microsoft Teams, and poof. Yeah. Now,
Yeah.
of course, Zoom still exists today because that kind of a first mover advantage, and that's why they were able to lock in customers and satisfy some customers. But I prefer slow compounders, and Google and Microsoft are still relatively slow compounders, in my opinion.
Yeah. Yeah. I really like that sentence you said around, if you can make a lot of money fast, you can lose a lot of money fast. And I think it's kind of I think that's the typical dividend growth mindset, is not losing your money first.
Yeah, but think about this DeepSeek, this Chinese DeepSeek, right? Which was,
Yeah.
by the way, also running on Nvidia chips, but illegally, yeah. How much it cut the cost? Have you seen then how they looked at Nvidia? Yeah. Now I think there is a good story for Nvidia why it will continue to grow crazy. But yeah, a few of such innovations may suddenly make the need for so many chips less. Yeah, here. And also they may need to cannibalize on their own production. Yeah, making faster chips or higher, more productive chips. Well, while maybe at a certain moment the additional computing power may not be needed. Yeah, so I don't know when that happens, but yeah, it's really about valuation there for me.
Yeah. Now, we do get a lot of beginner investors, or at least at the start of their journey, listening to the show. We get lots of questions around that. But do you remember how you manage your emotions when waiting for those dividends to accumulate? It could be quite difficult. And I would imagine it's even more difficult if you're investing since COVID, particularly like you could have invested in Bitcoin, Tesla, Nvidia, and seeing your returns skyrocket, and you're only earning €100 in dividends.
Yeah, I think it's a bit. I think I'm been born with a gift in this of patience. I was collecting post stamps when I was a child. I mean, I think this answers it all, right? I was a guy that was going to the post office, buying a stack of 100 envelopes, and then using the steam to take the post stamps of it and putting it in my collection book.
That says it all. I think we'll end it there.
So,
no,
what about you?
I think it's a good point. But I remember I didn't actually see it as a challenge waiting for those dividends to accumulate. I wasn't focused on the end goal of being financially free and earning 30,000, say, or 40,000 in dividends. It was always like the first dividend I got, I didn't have to lift a finger to do that. I remember how excited I felt for that, and I just wanted more. And then I set myself little goals: €10 a month, €100 a month, 1,000, and then to reach 100,000 portfolio. And it's just those little goals kind of keep me from dwindling away from that. Of course, when you look at, like we spoke about it on the show, you look at the likes of GameStop when everybody was making money. It was quite clear you could make money in a short period of time if you wanted, but it just didn't resonate with me. It didn't have my goals. I get lots of people asking me about this and work. Why don't you do this? And why won't you do that? And I'm like, it's more about patience, the little wins, celebrating the little wins. I think that's what kind of kept me at it more so than anything. I didn't focus on the little amounts.
What helps me still today, already for more than 10 years, is something very simple. I have this calculator on EuropeanDGI.com, right?
Yeah.
And it's really simple. When I plugged in the data, if I buy stocks with an average of 3.25% yield and the dividend grows by 6% annually, then and I'm able to, I don't know, invest so much per month, then after 15 or 17 years, I will be financially independent. So, and if you then just plug in every month your data, and after half a year, you see like, oh, I'm on track. And after a year, you see I'm on track. Yeah, after 3 years, you're still on track. Oh, the only thing I need to do is just keep on doing what I'm doing. And I come there. And then I think like, well, is 15 years long enough to wait? Yeah, I'll be somewhere in my mid 40s, late 40s, and I can retire. And then I will have hacked my whole career out of it, because you could say then in where normal people work more than 40 years, I will work half of my career. Yeah. And then I hack the system. So for me, it's really like I'm just following a formula. It's easy. It's just math. And the only thing you need to have is the discipline.
Yeah. Well, I feel like we grew up in simpler times, easier times, and people growing up now have this instant gratification. You can get music on demand. We had to go and buy tapes and then CDs. We couldn't just
had to collect calls.
Yeah. I mean, so I feel like when we were growing up, we had to learn little bits of patience with stuff. I didn't collect stamps, but I did collect these Premier League stickers, and you had to all that kind of thing. But right now they have everything instantly. They want to watch a movie, instantly.
But you remember, if you agreed with your parents that they would pick you up somewhere,
Yeah,
sometimes you were just waiting for an hour outside.
yeah,
There was nobody that could call you. You didn't have a mobile. You were just standing there somewhere in the street, waiting for your parents, and then your parents were late. They went shopping or something like that, or they forgot about you. Yeah,
yeah.
for some time. You were just waiting for an hour in the sun, and you were just standing there. You were just counting the ants on the sidewalk or something like that.
Yeah, you make your own fun. Like we had a power cut here on Wednesday. Yes, completely gone for the whole day. It was planned, and the kids didn't go to school because I live right beside the school, so they had
Yeah,
no power. And I came home from work, and honestly, they were sitting on the chair, and it was like they had no phones, they had no internet, they had nothing, and they were just sitting there so bored. And I'm like, I just don't understand. Go out and kick a ball, go out and play games, jump a rope,
exactly.
climb a wall, do something like. But they just can't function without phones and instant
Yeah,
gratification. So that's why I feel, depending on your generation, it might be a little bit harder to show that patience because you're not used to showing
yeah,
it. So
yeah.
yeah,
Well, their kids will be wiping your ass one day, or it will be a humanoid robot. Yeah.
it'll be a robot. It'll be a mere robot. That's for sure.
Imagine that. How are
But
you
then
doing there today?
there's a good one here about seeing the stock price drop after buying it, and I don't know if you saw Facebook
Yes,
yesterday.
yes, it was a
Um,
nice picture.
yeah, and someone tagged me in it and said this reminds me of me, which I got quite a chuckle off. I have agreed to let everyone know when I'm about to sell, so everyone can make a shit ton of money. But does that affect you at all when you buy a company and it just drops?
No, not anymore. I remember when I was not a dividend growth investor yet, and I mentioned a few times on the show. I remember one of the stocks I bought at the time must have been, I don't know, KPN, the Dutch telecom. And I'm talking here about 2005, 2006. And if it then went up 2% or 2% down, and specifically after I bought 2% down, I was nervous like hell. Like, oh, yeah, I'm losing all my money. I put 100 euro in the stock market, right? But that was the feeling that I had at the
Yeah,
time. Yeah.
yeah,
So, but I don't have that anymore because you know what the main difference when I'm buying, I'm thinking, oh, if I bought, let's say, for 1,000 for 1,500 euro in shares, I think like I just bought 60 euros in annual dividend income for the rest of my life.
yeah,
Yeah, and this will grow. So I think like that. I bought 60 euros. Yeah.
yeah. I think that's probably the best way to look at it, but it's hard to ignore all the noise about share price because that's all you read, and we get
But
that from our questions. A company could be doing well
yeah.
fundamentally, and the share price drops 20%, and we get asked, "Are we selling? Are we
So in my
selling?"
dividend growth portfolio tracker, yeah,
Yes,
that is on my website. I on purpose didn't put such information in. You do see the share price of today, but if you have 40 stocks in there, you can't tell from my tracker whether it is up or down because it doesn't say like the daily change or anything. It doesn't say it. The only way I can see that something is happening is that my portfolio value, if I watched that, let's say yesterday, and I see today and it is a little bit less, I know that some shares are down. I would need to go to another app online to check prices, whether one of my stock went down. This
yeah,
helps so much, Derek. Any paid app that shows you the daily price change, you should not take, in my opinion.
yeah,
Just
yeah,
just it's like you need to create a system for yourself where you don't have those signals, where you don't have this stuff. It's the same as like your phone. If you don't want to be disturbed from your phone, turn the bloody notifications off. It's a simple setting. If you know that you have an issue with your emotions about share price, just make sure it's not in your views. Throw it out. It doesn't bring you anything.
yeah, yeah. I get that easy in theory, but I do appreciate because I use your tracker as well. I do appreciate that I can't see that, but I don't actually want to know really which one. I couldn't tell you which ones are my best performing or worst performing, generally speaking. After earnings, I might know because you check their
Yeah.
earnings, you see the share price. But day to day, I have no clue who might.
No, but this is what it is about. What did we start with when we start talking about emotions? It's about your learnings and then what do you implement to mitigate that.
Yeah,
So it's about the system you design. And this doesn't only apply to dividend growth investing. This also applies to your career. How are you productive? Yeah. Some people need to be in a silent space. Yeah. Others they just don't need any notifications. Others need to be in a Starbucks where there's noise around them, so that the noise gets them into focus. But you need to design a system for optimal performance, whether it's at work, whether it's for dividend growth investing. It applies to so many things in life. It's the same with you played football. You
yeah,
had rituals. Me too. If I don't put my left shoe on first before my right on, I know I will play a bad game.
yeah,
So even if I by accident start with my right shoe, I still will take it off and put my left shoe first on again. Yeah. These are things you need to do for optimal performance. It makes no sense what I'm saying, yeah, with the shoes, but somehow it goes into my mind if I do my right shoe first.
yeah,
So just don't do it. Yeah.
yeah, yeah. Makes sense. But you spoke about performance and it triggered me. Then what about holding a stock that's undervalued for years? What do you do? Because we had Unilever, for example, and it's
Yeah.
still in theory, I think, underperforming, right? How do you deal? Not so much the undervalued much because we spoke about share
Yeah.
price, but it's underperforming. So how do you deal with that emotion? Because you've held on to them, whereas I didn't. I've sold them
Yeah.
because I did not see the growth.
Again, rules didn't cut the dividend.
Yeah. So
And there was no big red flag that it would cut it. Yes, there was a moment where the CEO mentioned that they're not anymore looking at a growing dividend. They took that word out, but I had no signs that they would cut the dividend. On the other hand, with 3M, I did sell it. Yeah, and I sold it still 4 or 5 months before the dividend cut
yeah,
because everything told me with the PFAS situation, this is not sustainable. Yeah. So it is simply business analysis. Is the dividend safe? Is the dividend at risk? That's my main decision. I don't always have the luxury to study each and every company before it may do a dividend cut, but it's dividend cuts. I think the last one was Enagas. It caught us by surprise. It caught us by surprise not because of the data, because the data was all showing good. The commitment from the management was written in their presentations about what they just said. Suddenly, out of the blue, they said like, "We're going to reinvest in this and this and this, and for this we need to have capital, so we cut the dividend."
yeah,
Well, unpredictable management. It was out of the trend because they were always predictable. Yeah, you can have that sometimes in your portfolio. Yeah.
yeah,
And if you have a well diversified portfolio, the rest will how is it mitigate that loss of dividend. But that's how I look at there. It's the rules again. Yeah. When do
yeah,
you sell? And selling is for me the hardest, to be honest.
yeah. So what I'm getting then, what the feeling I'm getting from this conversation is the key to dealing with your emotions is first accept them, but two, a rules-based system will help you minimize any of those emotions. It kind of takes the emotions out of it. But what I find, especially looking online and maybe not so much in the investing world, but if you look at the trading world, everyone will talk about a rules-based system. But not everybody can stick to a rule-based system. And it's
Yeah.
only when shit hits the fan, like we've had
Yeah.
a mini crash now, a correction, when people go, I didn't stick to my rules. I should stick to my rules. I'm going
Yeah.
to stick to my rules going forward. And then things are good again and they forget about the rules. So,
Yeah.
I mean, so
Well,
what makes you stick to those rules?
I think it's character.
Yeah.
It's just my character. It's how I'm born and raised. All of this. I'm not the one that is. How is it? I will never forget. Do you know this Segways?
Yes,
Yeah.
of course. Yeah.
Yeah. You know how the CEO died?
Remind me, I've heard this before. I
Yeah.
have.
He was going with a Segway on a mountain and fell off the cliff. Yeah. I would never take a Segway on a mountain. I would not even go there. So I will also not fall off a cliff. Yeah, there are just people that are thrill seekers. There are people that need that in them. It's just in their character. Yeah, and it's part of it. So that's why I also think you need to find an investment style that fits your character.
Bingo. Yes.
So if you are needing this thrill, be a growth investor. Make it your circle of competence. Yeah, and you can earn a lot of money with it. Bitcoin, it's probably the best asset of the last decade from a total return point of view. So if you're a total return investor, I mean, not considering Bitcoin would be really weird. Yeah.
Yeah.
So what I'm trying to say is like, there are so many investment strategies that you can do. Other people want to make their hands dirty. Be a real estate investor, buy apartments, flip them, do this stuff. Yeah, there's so many paths to wealth. I think that's the most important. Character. Your character really, it's the most ideal if your character fits the investment strategy. Yeah.
Yeah. Yeah. It makes it far easier to stick to it without even thinking about it, for example.
Yeah. Exactly.
You don't have to force yourself. Oh, nice. So I suppose the only emotion that I haven't really touched on is, do you ever have any doubts about yourself, about your investment style, uh, picking the right companies?
Yeah,
anything like that?
sure. Yeah. I have often, I mean, not anymore so much about the strategy, not so much about dividend growth investing, but about the individual holdings. Definitely, I think it's normal to have doubts. The question is, what do you do with those doubts? Yeah,
Yeah.
and for me, to some extent, I'm happy that I have doubts because it always keeps me skeptical and looking with a critical view at the data that I see. Like, am I really getting it right? In the
Yeah.
end, you need to know, like, okay, I count myself as one of the lucky ones that really enjoys the job that they are doing. Yeah. But in the end, it's hard earned money. I mean, you know my history, right? I come from
Yeah.
what I would call poverty. Yeah. So I appreciate every euro. I worked for it. There's like 40 years of life investment that all was needed to get me to this point where I'm now. So I don't want to lose my money. So definitely I doubt about things. Yeah. Doubts that I mostly now have is like, for instance, okay, we see this all going on with Ukraine, right? The escalation that's going on. Most doubt that I now have, like, is, for instance, like, okay, so what would happen if a war would break out in Europe? Will I lose my whole portfolio? Yeah. Was it then really smart to have everything in the stock market? I believe
Yeah.
so. I believe it's if you study history, there are only a few assets that are really doing relatively to others well during wars, and that's businesses and stock market. Because if you have an international business, yeah, they will have. If you look at the Second World War, of course, Unilever had a lot of issues with profit generation, but they produce and sell everyday items. So they would also really lift up quickly again with the economy. But if your house was bombed, and you had all your net worth in your house was gone.
Yeah.
Your net worth. Yeah. So that's what I mean. Like, yeah, you can invest in gold, but how much gold can you carry? Yeah, when you need it.
Yeah.
So I do believe that the stock market, and then specifically those companies that we invest in, they provide much needed services. Those are blue chip companies. Yeah. So what I mean, like, maybe my portfolio would drop with 70%, but it would still mean I have 30% of my wealth. Yeah, then. And there are probably still better investment strategies, but these are doubts, yeah, that I have, and it makes me think, and it makes me wonder, zooming out, am I really having then, should I do something? Should I do something from a risk point of view or not? And yeah, I come then to a conclusion and think, like, no, let's continue doing what I'm doing. Yeah.
Yeah. I remember we spoke shortly after the Ukraine war broke out, and I remember you saying that about a house. A house can be bombed and it's gone. That always kind of resonated with me a little bit, especially because you know my wife wants to pay down the house a lot more quicker than I do. I've no interest in paying it down that fast. But it was just fascinating when you said that, because I never thought of that before. Whereas stocks and shares, you'd be thinking I own a part of the business, but then I'm thinking,
exactly.
will interactive brokers will still be there? Will I still have access to my shares? What will happen to my shares then? Because it's all digital. I don't have anything to say that I own them. So there's lots of thoughts around that as well. But yeah, we got a nice.
If that happens, then
we're screwed either way. Yes.
Yeah. It is your muscles and your fists and your ability to find food that matters.
Yeah. Come on, Hunter again. Relive my youth.
Exactly.
Yeah, look, I think this was a nice conversation to have. We probably could go into the mindset a little bit more and talk like that, but we might leave that for
but we are not the persons. If people expect on this podcast to hear about the millionaire's mindset, you shall start a business and everything. I mean, there are 1,001 podcasts about that by very successful people. I would really advise them to listen to the podcast Diary of a CEO, this British guy. He has many of such people on there. Yeah. We're dividend growth investors. So we think about just from a portfolio point of view.
Yeah. And probably risk adverse by nature. Anyway.
Yeah, exactly.
Perfect. Shall we move on to some listeners' questions?
Yeah, let's do it. Let's do it.
DG Investing has said, hey, European DJI, why not start a petition to push Schwab to bring SCHD to Europe?
Yeah, maybe we should.
Yeah.
I like it. Yeah.
Or you could just set up a trading 212 Pi and buy the top 10 shares.
Yeah, but you would need to then also every half year
manage it the same. Yeah. But it's an option.
Yeah.
But a petition would be actually interesting to do. We might do that. We might take.
Yeah, we should do something with that. Yeah. Good one.
Hans de Jong, if you don't invest in a tax efficient manner, taxes can heavily impact your growth. In some cases, you can minimize your tax burden by starting a company. How do you stay informed in some of these matters? Do you consult a tax advisor or read about it? What do you do?
Yeah, that's very very interesting question. I don't really have an answer to that. I do read a lot about it from time to time. I mean, every year or something like that. This when I'm filling in the tax forms, this comes to mind again. But this question of a tax advisor is often back in my mind. So I do have on my list something more around making sure that I speak with a notary as well, but maybe I should first go to a tax advisor as well. I mean, I've got a very simple setup, but at a certain moment, and then I guess that's where Hans is also coming from, or where I'm thinking more like, okay, at a certain moment you get to a level of wealth where you may wonder, like, should you set up a trust? What are the options in the country where you lived in terms of a trust and such, right? So I'm sometimes thinking about that, but time has been an issue so far.
Yeah. I would definitely say consult a tax advisor if you have thoughts or anything like that. I wouldn't take it because you get so much advice online, and particularly like in Ireland, tax is a big thing. We are taxed through the nose on dividends, property, you name it, deemed disposal, everything is taxed. So being tax efficient in Ireland means investing in your pension mainly.
Yeah.
That's being tax efficient. But yeah, there is other ways you can invest in certain types of startup companies over here. It's riskier. It might suit your risk profile, but it's more tax efficient. So there's definitely ways to do it. But you have to consult the tax advisor because they would 100% know better than what you'd read on any boards. Dom Perry has mentioned 2 dividend hikes. Phoenix Holdings, ticker symbol PHNX, hiked the dividend by 2%, and M&G hiked its dividend also by 2%. These are 2 high yielders in London. So the question is, Do you have any stocks which have returned 100% or close to 100% in price that you paid to acquire the stock?
No, I don't think so.
I would say Microsoft must be close for
In
you.
dividends?
Yeah,
No.
you bought them at a nice price.
Yeah, but I don't know how much dividend in total I got out of it. Let me see. All dividends received. No, I don't have anything. Neither Microsoft. No, Microsoft is at 30%, I think.
Oh,
Yeah. No, I've got nothing. Maybe Omega Healthcare, but it's not 30%. It is now at 70%, Omega Healthcare. And BHP. Oh, BHP is at 80%. So Omega Healthcare and BHP come closest.
yeah. My closest is Altria, which is around 40%. So not
Oh,
not near 100, but
yeah.
we're getting there. Grant Lee has asked us, still at the beginning of the journey and trying to do my own analysis using online guidance. He's been looking at Adifica, which is a Belgian real estate investment trust. The figures look good from a DGI point of view, but it has a chowder of 13.1. Does the chowder rule work on real estate investment trusts?
Yeah, of course. Of course.
13.1 is quite good for a
Yeah,
for
yeah.
a
Usually they look at 8 or 9 for a real
8.
estate investment trust.
Yeah,
Yeah.
yeah, it's usually lower. So 13.1 is quite good. Greenio, what was your biggest investing mistake and why did you sell too early?
Oh, we know that. General Electric and Tupperware, but sold too early. If anything that I sold too early, what I probably could have better kept was McDonald's at the time. This was still you have those moments in your life that you feel like you're smart, but you're not wise.
Yeah,
So I did a calculation on McDonald's for like, oh, it's 50% overvalued. I have to sell it. Yeah, I bought it at 90, sold it at 120.
yeah, yeah. I got a bit like that with AbbVie, but that was more so with their debt profile. I think one that I sold too early was definitely ADP or APD. I remember selling them because they were trading at like 130. I bought them at 80. I was like, they're overvalued. I make a nice profit. And they doubled in price within 3 months of me selling. Maybe this goes back to the Facebook post. I need to just
Yeah,
announce this
yeah, yeah.
before. But yeah, I remember that one quite vividly. Andrew has asked us, do your wives plan on retiring when you reach fire?
Yeah, like what I mentioned on Facebook, my wife is my passive income, so don't wake up sleeping dogs.
The answer for me is yes, of course.
Mine. I don't think so yet. I think she has a different approach to work than I have.
Yeah, but I think that if I am retiring because I reach
Yeah.
fire, I will do it with my wife. I don't want to do it on my own because if everyone around me is in work and my wife is in work, then
Yeah.
what's the point?
Yeah. True.
So I would want to do it together if I was to do it.
Yeah, it's we have this conversation often. I don't even know myself yet if I will straight away stop working. Yeah.
Yeah, we flip flop.
Yeah.
Kieran has asked us, have you ever invested in a local company to yourself? So an example is Greg's, because they're from Newcastle, also known as the Carabao Cup champions. Congratulations, Kieran. Actually, Newcastle deserved that win. I can be humble in my defeat. We did not deserve it. So well done, Newcastle.
No, I haven't. But of course, I know Albert Heijn a lot, and that's why I'm investing in Ahold. So I do have some Peter Lynch stocks, indeed.
Okay. Glanbia, I wrote a deep dive on them, and
Yeah.
they were founded in my backyard in Waterford. So
Nice.
I own some shares in them. Also, yeah, not Greg's. Glanbia is the only one. Hugo has asked us, could T. Rowe Price ever be targeted for a hostile takeover from one of the big industry players?
I mean, that's a suggestive question. Of course, it could be. Yeah. If it will happen, I don't know. I mean, the nice thing is they have a good balance sheet. So if there's another company that feels like they are poorly managed, the T Rowe price is poorly managed, of course. Yeah.
Yeah. I don't see it happening, but
It really depends on the other company whether they feel there's unlocked value in T Rowe price.
Richard has asked, what has been your best and worst performing stocks since the tariff noise has started? And has it influenced any of your buys/sells?
So I simply can't answer that question. I think Target went a lot down because I've been buying some Target the other day. But again, I don't track what are my best or worst performing stocks. Yeah.
Yeah. I don't know since the tariff started because I don't track it every day or monthly. I don't know. My worst performing stocks are probably some of the English stocks because the market just keeps dropping and dropping and dropping. So, but I don't know since the tariffs. Centrino wants to know, what was your thesis to initiate a position in SELA, ticker symbol SOLA?
Yeah, it's a little bit of an exotic one in the real estate investment trust. I just liked a lot what they are investing in the healthcare space. I don't really have a lot. I have Omega Healthcare, but I call that like the stairway to heaven. It's literally the last bet that anyone will see is an Omega Healthcare, and I feel SELA is a little bit more earlier in the journey. I liked it. It's relatively unknown. It IPO'd just a year ago, so I also have a feeling like, yeah, quite early in, and I want to try that for a time. I mean, I own just a few shares, so it's not too much.
Yep. Yedida has asked about our thoughts on Accenture, ticker symbol ACN. They reported their earnings this week and they've dropped in price to what he considers an attractive level. You like this company a bit, if I remember.
Yeah, I think it's one of the best consulting firms.
Yeah. Honestly, I didn't see a whole lot. I'm only looking at the top line numbers, but I didn't see a whole lot wrong with the earnings. Everything seems to be up. You're looking at the same snapshot I am. America's up 11%, EMEA up 7%, Asia up 2%. So revenue looks quite strong in the first half of the year. What I am seeing though is operating margin is down 15%. So maybe that has something to do with, there must be some unexpected costs or something has gone up, although earnings per share has actually increased. So maybe their tax burden is lower or they're getting extra income from some financing. I don't know. I haven't dug deep into them, but looking at the top line numbers, it looks okay, I would say. And if they've dropped with 2% yield, from what I hear about this company, it looks like it's something promising.
So they have been effectively flat for the last 4 years, and they are trading now at a 25 PE. It means that they were very overpriced, and there's just multiple compression going on.
Yeah, I always felt they were overpriced. I know they're an Irish company, but they've always been outside of my scope because the yield was too low, and I remember the PE ratio was above 30 for most of it. So maybe if it comes down below 20, it'll start looking more attractive to me. Marco wants to know about Walters Kluwer. Is it a buy?
Marcus, that is only known to our premium subscribers. I just did a deep dive on it. But if you want to have a clue, just look at their PE multiple and it will say enough.
Okay. Rob, we've already answered your question on Nike, I believe, in the beginning. And Jean-Christophe...
But he asks also, what about Adidas? Looks to be a stronger brand.
Yeah.
So I don't know. I don't follow Adidas. I just know that my son loves Adidas shoes nowadays.
I prefer Adidas shoes all day.
Yeah.
All day.
I nowadays Nike. What is funny, in our, in the 90s, you had to have Copa Mundial when you were a football player.
Yeah.
Now it's all Nike. Everyone wants Nikes on the football pitch.
Yeah.
I really feel like, how did Adidas screw it up? They were like, I mean, if you didn't have the black Adidas shoes and you had to put the fat on it and everything before when you cleaned them after the game and then before the game, I mean, you were the man with Copa Mundial.
Yeah, and then
Uh,
after that there was Predators. Remember Adidas Predators?
yes, Adidas Predators, and then suddenly Nike took over, and yeah,
Yeah. Nike are phenomenal when it comes to boots. I've actually promised my son, right? So tomorrow they're playing in a quarterfinal. It's an All Ireland thing, so
yeah,
very few clubs from our area ever make it out of our area, let alone to the
yeah,
stage. But I promised him if they get to the final, I will buy him any pair of boots he wants. It doesn't matter the
yeah,
price; it will be any. And he's looking at these Nike Elites they're called, and they're six,
yeah,
700 euro. And I'm going, do I want him to win? Do I want him to win?
yeah.
But yeah,
No,
I hope he does. And I'll be
what
buying.
for me is what for me is still like an epic move from Nike is to become like the shirt sponsor of the German national football team from 2027 forward.
Yeah,
Yeah, like Adidas after 77 years, they will lose this and Nike takes it over,
in their
on their
home,
home turf.
in their home
Oh
turf.
my God, that's
Yeah,
epic.
that's crazy. But as a European, maybe not from a business or a fundamental side, I just prefer Adidas
Yeah,
all over. But I know they also cut their dividends, so I never
yeah,
took them.
exactly.
I never took them seriously in that world. We got a question about the French. Is it a question from FDJ United? It's about anyway the French National Lottery. What are your thoughts on this company?
Yeah, so Jean-Christophe asked about this, right? I never heard of it. So first of all, so I spent 10 minutes only looking it up before the show. So what I saw is they just IPO'd. I mean, they were, I think, privatized in 2019.
Yep.
They are the owner of the French National Lottery, Lotto and such, and they acquired in 2023 the Irish Lottery as well, Premier Lotteries Ireland. Very interesting.
Yep.
Also, they are purchasing Kindred, I believe, Kindred, which is also an online gaming and sport bettings company. Very interesting. And with Evolution AB, more in the online modern online gaming, but the lottery is probably more for the boomers, right?
Yeah.
But hey, look, what I find most important here and most interesting is they had an increase of 10% in revenues. Yes, 70% overall, but that was excluding. So that was including Kindred. Then their EBITDA was up 21%. Their earnings were also up by 13%, and they did a dividend hike of 15%. So they now pay out a dividend of 77%, dividend payout of 77%, €2.05, 7% dividend yield. Their aim is to pay out dividends with a payout ratio of 80 to 90%. So they are just below that range. So, a lot to like on a first screen. Let's say it like that. And I do think that lotteries and such are a sticky business. But I would need to do more research. I would like to, with this company, I would like to understand, like, how is the youth interested in this? And are the youth, when the youth turns into, that they become parents, sit at home, do they also suddenly start paying lottery tickets and buying lottery tickets and such? And that's what I'm interested in if I wanted to understand this company. What are the demographics of their customer base?
Yeah. I think that's true. I actually remember when they took over the Irish lottery and they made quite some changes. The odds got increased, so it was more difficult to win. The top prize, you could win a lot
Yeah.
more on the smaller prizes, and they introduced more games.
Ah.
So like €1 instead of €5, and you could do this 3 times a week. So if somebody was there, I have €1, they might do that. So I remember that quite well. I've no issue with them in the lottery. I think that's kind of a high margin business. I can understand, and they aim to pay out 80 to 90% of their dividends.
Yeah.
But how sustainable is that if they're going and taking over an online gambling company? So I think it's Kindred is, if I remember, is formerly known as Unibet.
Yeah.
And they are more in the Danish market, which I don't know how strong that is compared to Western Europe, i.e. England, Ireland, those type of markets. So that would be my concern with them. I would be
Yeah.
concerned with dividend safety there, but yeah, interesting. The way that the question was, I thought the name of the person was FDJ United. I didn't realize it was from Sean Christophe. It's the name of the company. And then last question of the day goes to Christian, and he's looking for a deep dive into Evolution AB, and he is in luck because we did this in episode 186 with our good friend Wolf of Hardcore Street. So check that out if you want to hear our thoughts on that. Awesome.
That's it?
Yeah, that's it. Last question.
Awesome.
Perfect. Listen, thanks to everyone for all the questions. Again, I hope you like this conversation. Sometimes we like to just have a conversation and just bounce some ideas. So we hope you like that, and we will see you all next week.